Are you surviving January or now February of 2026?
Well, to be fair, we had sort of thought that there would be more volatility coming into this year, partially on the back of the fact that you had 3 good years in a row. There was a lot going on. There's a lot of shifts that are happening. But out of the gate, we seem to be having a lot more volatility than I think people were necessarily looking for.
You guys put some research on the website. It was mid-January entitled Markets March On, But Risks Linger. So what risks concern you the most? I mean, we just laid out some global issues, also domestic issues, which hopefully are de-escalating, but there are still issues out there.
There's a lot going on the global front. There's a lot going on the investment front. I think that right now we still think that earnings are the most important thing, and the fact that Google is reporting tonight is that's going to be an important bellwether, because you've seen some mixed results from companies, and even companies with good numbers. If you're not giving fantastic guidance going forward, or people looking for very strong numbers going forward, there's a lot of easy disappointments that seem to be happening here. So I think that is telling you that the market was coming into all of this on fairly high levels and had a lot of expectations. And even if you're meeting some of those, it's not good enough in an environment where people are starting to get scared again about what is going to get disrupted by AI and how badly and how fast.
Okay, so I'm really glad you went there, because that's exactly where I want to go. We're seeing another day of selling when it comes to software stocks, ad agencies, investment firms. They're all caught in a wave of selling. Investors are concerned about the business risks they face from better AI tools. What sticks and what doesn't? I think a lot of people are scratching their heads right now thinking, okay, wait a second, if we're in the midst of a new industrial revolution, what is the actual effect going to be on these companies that have just dominated the space for a decade?
I think this is the biggest concern, because in the same way that when people started talking about, the internet's going to do this and the internet's going to do that, it was unclear who was going to win and who was going to lose. And there were a lot of companies that came out of the gate that looked like they were going to win, and in the end, not everybody shook out the way you thought it would. I think the problem right now is that the fear piece is very high, and the understanding of where that's going to go is not very strong. And I can understand why there's a concern about data companies and about software, but it's not like we're going to take Microsoft out of every computer because there's other ways of writing software. Like, there's a lot of embedded stuff that is not going to be disintermediated in that way.
But it doesn't seem like people are concerned about Microsoft. They're concerned about the Salesforces of the world. They're concerned about the software as a service companies that sell a certain number of seats. And if you don't need as many of those seats, and those companies are facing challenges.
I think the concern is both the growth and the repeatability of those cash flows, and that's what seems to be the problem. But at the same time, there's a huge ecosystem around a lot of those softwares, and it's not so simple to say we're just going to pull this out or this is going to be changed in this way. I think the question really is, they were demonstrating fantastic moats, fantastic growth. What if those things are not as strong as we thought they were? And I think that you're getting some knee-jerk reactions to, let's sell everything across the board. I can understand on the data side, it's a lot easier to find data that it used to be difficult to find. So there are some concerns there. Whether or not that ends up over-toppling the business model is not yet clear, but I think that the fear starts, and it kind of feeds on itself.
All right, so chalk went up for the short sellers, right, who have made some money on this play. We talked with our own Mandeep Singh of our Bloomberg Intelligence team, who said this is, in many ways, a valuation play, and we have yet to figure out how much disruption to these software guys, and we're going to see some change in companies. I wanted to go back to, is it fair, Sarah, in terms of the AI disruption, that it is akin to what we saw with the internet disruption? Is it apples to apples?
I don't think anything is apples to apples, and I think that that's the hardest thing, because everybody wants to go back in history and say, okay, I can find a playbook where I can understand that if this is happening to this industry, this is the logical conclusion. The problem is that we don't know what the answer to that is, and to a large extent, it's so fascinating to play with AI, because you can ask it all these questions and get this data back in a way that we weren't used to having. A lot of that data isn't the best data in the world. You may not want the free version of a lot of things. And so the question of what we're paying for and how and who has proprietary data is a whole big question that's unclear.
How are you guys using it?
We use it in a lot of different ways. It can do a lot of early research for you. You can ask it questions about what has been the earnings trend of this company, what's wrong, what are the biggest fears that people see to this company, what are the greatest advantages that people see. But you have to then go back and look at that source material and sort of figure out whether or not what the information that you're getting makes sense. Because it's great to say, I can get all this information. You still have to weed through it. It's just you're gathering it faster and in ways that you weren't doing it before. It's sort of like when Edgar went online and all of a sudden you could go through 10K filings things online. You didn't have to wait for the mail to get there. I mean, there's all these things are iterative, and it's hard to see exactly how that's going to change everybody's business process.
So for you, is it increasing productivity?
It makes it much easier to weed something out or in the early stages and say, I'm looking for X or Y, and figure out some of that information, because it'll pull information from a lot of different sources. I'm using it on Bloomberg, right? Because Bloomberg has the Ask Bloomberg. And so it comes back with a lot of good stuff, and then you can go to that source material, and I find that helpful.
Number one risk, you think, at this moment in time for 2026? Just got about 20 seconds, 25.
I think for markets, it's going to be earnings, because if it looks like the earnings are turning down, or if it looks like that delta is changing, I mean, I think that's actually the biggest problem.
Revenues, or both?
You
care about
both. It's
okay.
both, but it depends on which direction and how fast. I mean, part of the Microsoft problem was a little bit of a change in growth. It wasn't that big of a change, but anything that's negative, the delta's going negative, is a problem. And I think that is where 2026 is going to be challenged.